Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Israel vows retaliation. State-run Lebanese media say planes have targeted Beirut suburbs as the Mideast conflict intensifies.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
The VPs go head-to-head. Vance softens his tone, and Waltz drills in on election claims.
He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
And it's day 2 of the U.S. port strike. The Biden administration lines up firmly behind the dock workers.
What we want to see is collective bargaining in the best way for the workers, to make sure they get their fair pay, to make sure they get the benefits that they deserve.
Good morning, Menace.
Danny, a very good morning. To understand what happens next in the evolution of equity markets, Nasdaq down 1.5% yesterday, is to understand what a significant retaliation from Israel will be to Iran. We can talk about that through the programming this morning. Stocks are on the back foot. Nvidia was down over 3.6% yesterday. Takes another leg lower this morning. What to do? Ed Yardeni says, do not sell these stocks. This is your opportunity to step in on geopolitical disruption you want to buy. Roll it over, have a look at the bond market. This was the very reaction function. It was down by 8 basis points yesterday in the very first reaction to the attack from Iran on Israel, that news that they were preparing to attack. And that sort of overshadowed the ISM data, contracting the most in 6 months. The oil market is where you're seeing the most reaction, up over 5% in the very first response yesterday. It carries through this morning. The question now is, what will Israel do in terms of the infrastructure, potentially in Iran and their oil production? Danny.
Menace, I think that is the question, right? Is this different than April the 13th, when that attack on Israel by Iran was largely erased from the market's minds just a few moments later? Perhaps when the arguments for it is different, they used twice as many missiles, and Netanyahu's language is much more strong this time around, saying Iran made a big mistake tonight and it will pay for it.
And it's a question of understanding the recalibration from Israel on Iran. Will they go after the nuclear sites? That's what some of the calls were yesterday across the networks. The second issue is, of course, will they go after the oil infrastructure, over 3.4 million barrels a day of production of oil? And the choke point is the Persian Gulf. The pivot shifts now in this discussion.
Well, to your point, oil still under pressure this morning. Tensions did escalate sharply. Just the details on this. After Iran fired about 200 ballistic missiles at Israel last night, the Israel Defense Forces said many of the missiles were intercepted, with one reported death in the West Bank. Israeli Prime Minister Benjamin Netanyahu has vowed to retaliate.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
Lebanon's state-run media at the moment saying that Israel has struck the southern suburbs near Beirut. U.S. National Security Advisor Jake Sullivan said that the U.S. is working with Israel on a response. President Biden reaffirmed his government's backing of Israel.
At my direction, the United States military actively supported the defense of Israel. Based on what we know now, the attack appears to have been defeated and ineffective. Make no mistake, the United States is fully supportive of Israel.
Joining us now is Bloomberg Horizon's Middle East and Africa anchor, Jomana Bersecci. Jomana, can you just take us through what we know at this moment and how Israel might respond?
Yeah, well, another quite dramatic escalation in Middle East conflict yesterday. And what we know is around 7:30 p.m. local time yesterday evening, Iran fired what was expected to be around what was analyzed to be around 200 ballistic missiles towards Israel. Explosions were heard around cities, and the IDF were quick to say that most of the missiles were intercepted. There was a limited damage on the ground, though later the reports emerged of shrapnel having killed one person, 2 other injuries emerging. Now, Iran went on to say that these strikes were in retaliation to the killings of not just Hassan Nasrallah and that senior IRGC commander in the airstrike in Beirut last Friday, but also in retaliation to Ismail Haniyeh's assassination, which occurred over a month ago now. So this has been long in the works. And from Israel's perspective, we heard comments from the Prime Minister, and you just referenced them now, saying that Iran made a big mistake tonight and they will pay for it. And so there is anticipation of Israel's imminent retaliation. It's expected to come in coming days. Axios reporting earlier today that if they do retaliate, it will be significant. And there are many hawks within the Israeli cabinet saying that the retaliation this time around, a bit dissimilar in contrast to the response back in April, needs to be more forceful and perhaps go after more strategic infrastructure within Iran. And when you talk about strategic infrastructure, there are two things that come to mind. The first is oil infrastructure, which of course would mark a significant escalation. And the second, if you want to go even further, would be some of those nuclear sites as well. So all still up in the air, but certainly the last 24 hours mark a serious escalation.
We're certainly going after the oil production capacity, Jemana, in Iran. Cuts off the lifeblood, one could say, to a lot of the funding, not just for Iran, but for the proxies. Jemana Basetchi in Dubai. The oil market, as I said, has been spiking higher yesterday and today. The tensions are rising across the Middle East. Trafigura's chief economist told Bloomberg very plainly, nobody really knows how far this can spread. The market, however, doesn't fail to take notice.
The market has gotten very good at forward-solving problems over the last little bit. I think, we've seen really since October when the conflict started that, when you would normally have had missiles going across, a tanker on fire in the Red Sea, the type of heightened tension that we've seen, that oil would be much, much higher than maybe where we are. So I don't know if it's complacency or as much as saying, look, that there are some solvers and we just don't know where this goes.
Will Kennedy joins us on the story. Will, to understand the spike higher in the oil price, it's a very initial knee-jerk reaction. As Jemana was just saying, it's about what happens next in terms of the severity of the response to Iran and whether that oil infrastructure in Iran and around the Persian Gulf comes into a much clearer focus.
That's exactly right, Manus. I think one thing we can say is that yesterday felt a bit different in terms of response to the oil market. In the past, as things have escalated in the Middle East, traders have tended to take it in their stride because they didn't see the prospect of actual disruption of oil industry, oil exports coming out of Iran. I think that risk calculation has changed after last night for exactly the reason you say, is that traders are now having to think about what the Israeli retaliation looks like. Israel has clearly flagged, as we saw a moment ago, that the retaliation will be significant, and there is some speculation that could, although I would stress we do not know this, that could include oil sites, whether that's refineries or oil export terminals, for example. And I think that means that the market is having to think about this a bit differently against a context where a lot of people were positioned very bearishly.
And part of that bearish positioning, Will, is an oversupply of this market, especially coming from OPEC members who are still pumping out oil despite cuts. Saudi warning of $50 a barrel. How do you think about the tension between the pull of higher prices on geopolitics and oversupply in OPEC?
I think this is a really important point, Danny. And the thing that I would add to it is that, yes, clearly we live in a time where oil markets don't feel that tight, and that is what capped increases because of the political situation. But one point that I would really stress is that OPEC also has a lot of spare capacity. If you think about Saudi Arabia and the UAE in particular, in an extreme situation, they could quickly bring a lot of extra oil onto the market. And look, I don't think we're anywhere close to that now. We would have to take something that we haven't even contemplated yet in terms of disruption or military action against Iran. But that possibility is there, and I think that that's one reason why the oil market has not tended to overreact to the increasing tensions between Israel and Iran.
Well, it's a salutary warning from Prince Abdulaziz bin Salman in the Journal, and they go with that in terms of a warning to OPEC Plus and the members on their supply. Will, thank you very much. Will Kennedy tracking the oil response. Our guest this morning is Sarah Harrison, Senior Portfolio Manager at Allspring. Sarah, good day to you. You say the biggest risk, geopolitical risk, all day long. Do you recalibrate, or do you wait to see what the significant response is from Israel? Do you have time to recalibrate?
Yeah, absolutely, and a great question. So oil energy is a huge part of the high yield market, which is where I tend to spend most of my time. Energy represents about 10% of the global high yield market. So a spike in the oil price will be impactful for what we see in our underlying companies. The commentators that you had on this morning balance the two competing forces very, very nicely. So you've got, on the one hand, the escalation that occurred yesterday. And then on the other hand, we are in an environment where there is oversupply in the oil market from OPEC members at the moment. And so I think that is what has capped the price move upwards. Certainly in the event of another escalation, we could see another spike higher. But for the time being, we are watching and waiting carefully to see what the next moves are, so as to not overreact to the first move.
Sarah, just to be clear, you're seeing this as something that specifically has an impact on oil. Are you seeing it as something that may dampen risk appetite and flee a bid into havens? Or does this look more like April 13th, where it is a fleeting moment and risk on can resume?
Yeah, so I mean, it's certainly, when I think about what the high yield market has done this morning, we're about unchanged to flat. So we haven't yet seen a big price move downwards as a result of this escalation. But things can change very, very quickly, as we all know. And so, we are still trundling along in the fixed income market, but we do have to be cautious and be aware that this is something that is sitting on the sidelines. I will say, though, in the high yield space, we are sitting on pretty high coupons. So the issuance that's occurred over 2022 and 2023 in the European high yield space and the US high yield space, think coupons like 7, 8, 9, 10%. And so that gives you some carry cushion for the potential for volatility going forward into Q4.
Sarah, beyond high yield, as you say, I mean, it's had the best start to trading in 5 years, in decades at the start of this year. But we've got a global regime shift, haven't we? We've got China at play, the ECB 90% probability of a rate cut, and the Fed doing jumbo rate cuts. This is a regime shift. How does that translate then to the rest of the bond market for you?
Yeah, absolutely. We think this is a great time to be, involved in fixed income. There's been obviously a direction change with regard to what the central banks are doing, and that direction change, depending on what your view is on the steepness of how rates move, could be super, super positive for bonds here. Our view is that the steepness of the trajectory going forward is perhaps not as steep as what is being priced in, but you can't ignore the direction of travel, and the direction of travel for rates is lower. And so our expectation, and it's been well telegraphed by Chair Powell, what the baseline is for the rest of the year, with the potential for higher cuts in the event that the market deteriorates or the data deteriorates. And so, we carefully watch the data and see how we go.
One piece of data that has just been outstanding, Sarah, has just been the issuance. September alone, $600 billion globally of U.S. dollar bonds. That is by far a record in a month. Do you look at that and say, okay, corporates, they are feeling great, they're feeling confident in the world, or is it a hurry up and issue before something turns worse?
Yeah, so I mean, earlier this year, there was a lot of talk about the maturity wall in the fixed income space and this growing set of maturities in 24, 25, and 26, and a worry that corporates would not be able to refinance these maturities. What we've seen is that corporates have very much been able to tackle these maturities, and in our view, the buildup of the maturity wall was corporate treasurers being savvy and waiting until the last minute to refinance their low coupon debt. When I look at the new issuance that we've seen over the course of September, I'm very positively inclined that there's been a lot of net new issuance. And so we are seeing new money come into the high yield market, which means that transaction activity is picking up, more LBOs, more M&A, which is healthy for the overall market.
Sarah, really wonderful to get your thoughts this morning. Thank you so much for joining us. That's Sarah Harrison of Allspring. Coming up, Waltz and Vance square off on stage. We're going to discuss what they got into, their strategies, all of that coming up next.
one thing that Joe Biden did is he continued some of the Trump tariffs that protected American manufacturing jobs. And it's the one issue, the most pro-worker part of the Biden administration, it's the one issue where Kamala Harris has run away from Joe Biden's record plan, but it's also a record. A lot of those same economists attack Donald Trump's plans, and they have PhDs, but they don't have common sense and they don't have wisdom.
Well, Kamala Harris's day one was Donald Trump's failure on COVID that led to the collapse of our economy. We were already before COVID in a manufacturing recession, but 10 million people out of work, largest percentage since the Great Depression.
Vice presidential candidate Senator J.D. Vance and Governor Tim Walz there facing off in last night's VP debate. Joining us is someone who not only stayed up to watch it, but has been up ever since. It is Bloomberg's Vonnie Quinn. Vonnie, tracking the reaction. Thank you so much for joining us this morning. I'd say one of the more remarkable things is that this probably doesn't even rank in like the top two most impactful events yesterday.
Well, we don't know yet, though, Danny. There are 34 more days to go before actual election day, and anything has the potential to sway a voter, right? So it may to us have looked fairly, non-eventful, but there might be some voters out there who took away something from this debate. That said, your hypothesis is probably more likely than mine. It was pretty uneventful. But that said, they didn't fail any of the tests. I think the tests going into it were, would they disappoint their boss? Would they be considered the right choice? Because there were question marks around both of them and whether they should be chosen. Would they create trouble for their boss, right? Would they have a problem that the top of the ticket would have to deal with after this debate? Doesn't seem likely. There were one or two gaffes, of course. At one point, Tim Walz said that he had befriended school shooters when he misspoke. He meant to say that, he had befriended the families of some of the victims. But ultimately, no huge gaffes. And as you can see, it was very convivial, friendly almost debate. There were handshakes before, there were handshakes after, and both candidates did introduce themselves as well to the public. J.D. Vance talking about how his mother had been addicted to opioids and is in recovery, and Tim Walz apologising to those who were missing Dancing with the Stars for the debate.
Well, I mean, if you look at some of the headlines that have come out, Politico say it was a very Midwestern debate and there was a lot of charm in it. Now, I think in our story it says Vance managed to sort of shave off some of the hard-line reputational edges. And I like what you said when we were chatting a little bit earlier, is that, he almost seems a lot less weird, using that phrase from Tim Walz.
It almost came across as if that was the intended goal on his part, right? That he was to come across very reserved, very quote-unquote normal. If you look at the Bloomberg Morning Consult poll that just came out of swing states, you see that people saw J.D. Vance as, yes, younger and healthier, but also dangerous and weird. Now, they're not qualities that you want people to think of you in terms of, right? So it was very clear that he didn't want this weird thing to come up. And bear in mind, it was Walz that coined this phrase about the ticket in the first place. So he definitely moved away from that. And at certain points, Walz did try to bring in this word dangerous, especially when it came to the Middle East and, J.D. Vance's current boss, Donald Trump. But he shot that down and said no, that Trump had been a stabilizing figure.
They also touched on Middle East politics, too. And it's something that Vance talked about, saying Trump was a peacetime president, and you haven't had anyone like that. So there's the sense that maybe yesterday Iran firing 200 ballistic missiles into Israel kind of feeds into that narrative. Now, President Biden did speak about it yesterday. Let's just take a listen to that.
At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective.
Now, Vonnie, earlier in the week, or over the weekend, I should say, Biden did say he would be speaking to Netanyahu. How does this color what we're likely to expect from that?
He said he would tell us when he had spoken with him and what he had said, but obviously things have changed ever so slightly since the attacks yesterday, the almost 200 missiles fired on Israel. So we won't know until President Biden tells us what that conversation was, if it actually happens. What we do know is that President Biden has a lot on his plate at the moment, not just this potential for escalation in the Middle East. He's also dealing with Hurricane Helene, and later today, he'll be going to South Carolina, followed by North Carolina. Surprise, surprise, they're also swing states, but he will be making visits to further swing states later in the week as well, Michigan and Wisconsin, Georgia. That also will be, Kamala Harris's journey as well throughout the rest of the week. I do want to point out that that was the first question that was asked at this debate. Both candidates did say that Israel has the right to defend itself. J.D. Vance also mentioned that if Kamala Harris were going to fix this, that she's been in the administration for 3.5 years and she should have done so already. But that was his response to most things.
And Biden was very emphatic yesterday on the press calls. He used the word 3 times: fully supportive of Israel and an intensive planning between the nations. Vonnie, great coverage. Off you go. Get a little bit of sleep. That's Vonnie Quinn tracking politics live for you here at Bloomberg this morning from New York.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Israel vows retaliation. State-run Lebanese media say planes have targeted Beirut's suburb as the Mideast conflict intensifies.
Iran made a big mistake tonight, and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to retaliate against our enemies.
VPs go head-to-head. Vance softens his tone and Walz drills in on the election claims.
He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
And it is day 2 of the U.S. port strike. The Biden administration lines up firmly behind the dock workers.
What we want to see is collective bargaining in the best way for the workers, to make sure they get their fair pay, to make sure they get the benefits that they deserve.
Danny, good morning. Take it away on these markets. I mean, a VP debate is almost like second-tier news at the moment.
And like maybe not even second, maybe third or fourth down the line when it comes to the market reaction. Yesterday, first it was about the data, labor market data seeming to suggest more softening, but then geopolitics takes center stage. Interesting to just look this morning to see what's sticking. Some of the risk off, equities lower. Yes, some of the losses were paired yesterday, but we are still down pre-market 0.2%. Oil still up sharply, 2%, 2.75% higher. We're at $71 a barrel on NYMEX crude, but we're just at the high of a month ago, basically, when geopolitics were the same as what they are now. So just to temper some of the moves there. The thing that is indeed reversing, Manus, it is yields. Yields were down sharply yesterday, both on that labor market data and concerns of geopolitics, with Iran firing some 200 ballistic missiles into Israel. But this morning, yields are higher by 2.8%, which begs the question, have we already baked in the lowest we can get for yields, considering we're pricing in something like crisis-era cuts?
Yeah, I mean, look, when you look at that shift in the 10-year government bond, it dropped like a brick yesterday on the announcement that we were expecting this attack from Iran with ballistic missiles. Here we are this morning. We're now trying to understand what a calibrated response would be, what an escalated or a significant response from Israel on Iran would be. Would that be potentially, at the worst scenario, to their nuclear sites? Maybe it is a degradation of their oil infrastructure, the refineries. They pump nearly 3.4 million barrels a day. That's what they produce on a daily basis, and that's the lifeblood to them and their proxies.
Yeah, and even just this time, Netanyahu's response is different.
Yes.
Last time around, in April, he basically said, I'm convening a war cabinet, and Israel has the right to respond how we want to. This time, he said very clearly that Iran made a big mistake tonight and will pay for it. That was also a feature of the debate, I should say, last night. Even though we joke, it was maybe tier 2. It did happen.
On any other day, I think it probably would have been number 1.
No, you're 100% right. But we have to talk about this because, I mean, it might be the last debate before the election. Vice presidential candidate Senator J.D. Vance and Governor Tim Walz faced off for the first time and last time on the debate stage.
One thing that Joe Biden did is he continued some of the Trump tariffs that protected American manufacturing jobs. And it's the one issue, the most pro-worker part of the Biden administration. It's the one issue where Kamala Harris has run away from Joe Biden's record plan, but it's also a record. A lot of those same economists attack Donald Trump's plans, and they have PhDs, but they don't have common sense and they don't have wisdom.
Well, Kamala Harris's day 1 was Donald Trump's failure on COVID that led to the collapse of our economy. We were already before COVID in a manufacturing recession, but 10 million people out of work, largest percentage since the Great Depression.
Let's bring in Bloomberg executive editor Michael Shepard on this. Mike, what was just your takeaway from last night?
Well, it was a strikingly different debate than the one we saw between Kamala Harris and Donald Trump last month, which was marked by such fiery exchanges. Last night was a much more civil and staid affair. The two candidates were respectful of each other, and they focused their attacks on the tops of their respective tickets. J.D. Vance was aiming his fire at Kamala Harris, basically saying, why does the vice president deserve 4 years in office as president if she has spent the current term not addressing all these current issues that we face on the economy, on border security, and on foreign policy as well. And then for his part, Tim Walz returned to the Harris argument that Trump is not fit for office and even invoked the former Trump advisors who have turned against their old boss. Now, what was striking also was that J.D. Vance managed to sand down some of the edges that we have seen surface on social media and in the many interviews that he's done on television. Likewise, for his part, Tim Walz came across as a little bit more nervous, a little less polished, and maybe a little less seasoned than Vance in the public spotlight.
Yeah, it certainly seems to be the consensus. We just had Vonnie Quinn with us, is that Vance came across perhaps as a little bit less weird and really turned on the charm, according to Politico. Let's talk about the other big issue that we're tracking here, the political fallout from the port strikes so close to the election. We talk about the economic impact. The Biden administration has made it very, very clear. I mean, Biden went to the picket lines with the auto workers. Now is not the time for the ocean carriers to refuse to negotiate. So Biden making it clear where he stands.
Well, industry groups, I'm glad you brought this up, Manus, because in that context, because Biden has tried to present himself as the most pro-labor president in U.S. history, and we're seeing signs of that yet again. He is now siding very clearly with the dock workers in this labor dispute. He has refused so far to enact any of the powers that he is allowed to use to force negotiations and force those workers back to the job so that we don't experience a kind of supply line ensnarements and difficulties that everybody fears could result from this strike. Instead, he is putting the onus on the ocean carriers and on the port operators to sit down and offer the kinds of wage increases and also promises on automation that the workers are seeking.
Yeah, I mean, again, remarkable he's using that price gouging language when it comes to what he calls the foreign ocean carriers. Mike, just quickly, before we let you go, Iran and Israel took center stage last night, not necessarily the debate. President Biden over the weekend had said that he would be speaking to Netanyahu, but that is, of course, before Iran launched 200 ballistic missiles towards Israel. What can we expect in a conversation between the two?
Well, more broadly, we're going to be looking at all the diplomacy that will take place between the U.S. and Israel and other parties in the region to see if they can keep this situation from getting further out of hand. And one of the big risks, of course, is that we see this retaliatory cycle start to repeat itself. If Israel strikes back at Iran hard, will Iran feel some pressure at home to return the favor and so forth? So what the Biden administration, the president in particular, and his advisors will be doing will be trying to keep this from getting out of hand. Yeah. Biden's relationship with Bibi has been frayed a bit, so we will be watching to see how effective that will be. He has not been able to push the Israelis close enough to the bargaining table to actually get a deal that would lead to a ceasefire either in Gaza or in the north in Lebanon against Hezbollah.
Well, Michael, his commitment to the situation yesterday was apparent, fully supporting Israel and, of course, a full engagement. Let's see where it goes to. David Shepard there tracking this story. Joining us for a little bit more on this escalation in the Middle East is Anna Rosenberg, head of Geopolitics at Amundi Asset Management. Anna, I just wondered to what extent we're using phrases like significant escalation. But for you, when you look at this, I want you to assess the differential between what happened in April and where we are now, because the landscape is fundamentally different. You've got a ground invasion and a hot conflict now between Israel and Iran.
Yes, so I wouldn't say that when we compare the missile strike last night to April that it's fundamentally different. Yes, it was bigger in the sense that there were more ballistic missiles. Yes, it was unannounced. It had to be bigger, but it was still a careful measure on Iran's side in order to avoid further escalations. Iran has no interest right now in entering a direct war with Israel for internal political reasons, also because they're very keen on resuming talks with the US to achieve sanctions relief. So we are still in a more significant escalation scenario, but we are not in an all-out war scenario yet. It is a tit for tat, and critically it is now, how does Israel respond, right? That is the game changer question.
And I mentioned this early. The language Netanyahu is using is different this time. April 13th, on that day, he basically said, we're going to assemble a war cabinet, didn't make too many comments. And then after that, his statement to the public was Israel makes its own decision on how to retaliate. This time, Anna, it's not necessarily saying, hey, we're justified in retaliating. It's, we are going to retaliate. He said, quote, Iran made a big mistake tonight and will pay for it. Does that tell you that this type of response this time around will be more escalatory and will be something that markets should be paying more attention to this time?
Yes. So let's look at where we are right now. At the beginning of the Hamas conflict, there were 3 steps from the Israeli perspective when it was about reducing the threats that they were facing in the region. First, there was the need to destroy Hamas military capability. Secondly, there was the need to destroy Hezbollah military capabilities, and this is what we're currently seeing. And thirdly, and there's a question mark behind there, there's the issue of reducing the threat coming from Iran via the axis of resistance and via its nuclear capabilities. We are still at stage 2, where Israel is focusing on containing Hezbollah. This is significantly requires a lot of resources from the IDF to focus on that. Nevertheless, you are right. I think it is a lot more likely that Israel will strike Iran now. The question is, how do they do that? Again, it will likely be a measured response that will avoid a big all-out war. That will require the IDF to be overstretched and will most likely cause the US to get more directly involved.
So this is twice that you've used the phrase, this is not an all-out war, it is a tit-for-tat response. Therefore, would you rule out attacking oil infrastructure within Iran and their nuclear sites? Because that is a major escalation if that is where Israel goes to.
Yes. So I would rule out attacking oil infrastructure in the short term. I would not rule out attacking nuclear infrastructure. I think we could get close to that. However, I think there are other targets that Israel could target, military infrastructure, for example, some government sites, for example, to instigate popular uprising, if you will, because as you remember, Netanyahu issued a statement recently to the Iranian people, in a way saying, you know, we need you guys for regime change. So these are issues that I think are a little bit more likely in the short term than oil strikes. On the nuclear strikes, I think that is a bigger question mark here too, because you can argue that this right now for Israel is a beautiful opportunity to strike, because clearly they are overstretched and they need help from the US in any case to strike those nuclear facilities. And given that they are overstretched and that they have the firm commitment from the US to support them, it could indeed be the moment that Israel and Netanyahu has for a long time been aiming for in weakening Iran significantly.
So, Anna,
and in that case,
yeah, Anna, if I can just jump in, because I want to get into the market reaction. You can kind of address what you're saying too. Stocks sell off, risks sell off, bonds are bid, oil goes higher. Does that mean that all of that was justified? What are you telling your clients of how they should approach these markets, given everything you're saying?
So clearly there's a lot of uncertainty. Nevertheless, I think the market is still very much operating in the base case expectation that it remains more or less contained and doesn't spiral out in an all-out war. And I think right now that is the right thing to do. When we're looking at oil specifically, there's on the one hand, there's oversupply. And for real impact on oil prices to materialize, you'll need to see a couple of things playing out. Firstly, you would need to see Israel attack oil infrastructure in Iran, which I don't think is the most likely response, as I said right now. You would need to see Iran attack Saudi oil infrastructure, or you would need to see some disruption in the Strait of Hormuz. None of these issues are very likely right now. So what we have seen in relation to the markets is that all the geopolitical pressures have increased the appeal of safe havens, of gold, and that I think is very much according to what is currently happening.
Anna, really wonderful to get your thoughts on this this morning. As always, Anna Rosenberg of Amundi Asset Management. This is Bloomberg. It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. So the private equity investor General Atlantic has acquired investor Actis in a bid to grow its portfolio in sustainable infrastructure. The deal officially being announced this morning. I am pleased to say that joining Manus and me is Torborn Caesar, chairman and senior partner at Actis, a UK-based infrastructure investor. Torborn, really wonderful to speak with you this morning. So this deal, $97 billion in firepower now between you and General Atlantic to get infrastructure deals done. What is going to be your number one priority going forward?
Great. I mean, it's great to be here. Now, as you said, it's good with some good news in these times. So, yeah, we closed yesterday, combining the firms and sitting here in our London office and looking forward to welcoming our GA colleagues over to celebrate this afternoon here. I mean, I think that if you look at it from our point of view, infrastructure, sustainable infrastructure, our focus will remain focusing on, shall we call it, most of the world, not rest of the world, but most of the world outside US and Western Europe, where 85% of the world population lives, where you have 2/3 of all the opportunities in infrastructure, while you have only 1/3 of the capital chasing those opportunities. You know, the 2/3 are busy chasing the opportunities in US and Western Europe. So I think, you know, we're going to continue focus on that from an Actis point of view, but being part of General Atlantic as a platform, I think we're stronger, and we will be able now to offer a variety of risk-return products to our LPs, all the way from, say, more tech growth investing up to maybe more our space in terms of boring, stable, contracted, inflation-protected infrastructure. So very exciting.
Sometimes the boring delivers very solid results on an ongoing basis. There's nothing wrong with a pipeline or indeed delivering on a constant basis. Look, there's you in this market, as Danny says, just under $100 billion bucks combined entity. BlackRock and Microsoft launching a $30 billion fund. Is there a frenzy of bidding for assets? How would you describe the asset market that you're going after right now?
Yeah, I mean, I would say that, you know, the whole infrastructure space is growing, the alternative asset space here, and, you know, and it's consolidating. And I think that is driven by the LPs wanting to have a variety of risk-return products. You can offer a solution rather than just selling, you know, a certain product to them. You know, if you're looking at therefore, you know, what we are focusing on, stressing what I said here, 2/3 of the opportunity set is in most of the world, the non-US, non-European part of the world, and you have less capital chasing that, and that's where we are focusing. I think there has been some frenzy in terms of having that 2/3 of opportunities chasing 1/3, 2/3 of the capital chasing 1/3 of the opportunities in US and Europe. But I think from our point of view, the need, you know, where the sun is shining, the wind is blowing, to, you know, build critical infrastructure across Latin America, Eastern Europe, Africa, Asia is massive. And in one way, we actually need more competition and more capital and competent people to come in. So I think it's a good space to be in, obviously.
I know you're focusing away from the U.S., but such a big factor of this is the U.S., with more tariffs threatened by a possible Trump administration, nearshoring to Mexico, which, by the way, China is going to as well. If we get a Trump presidency, does it change your strategy at all?
No, I don't think it does. I mean, I think that if you're looking at the big political, spectrum, and you can say that election is some uncertainty around that. There is significant uncertainty around the sad events that you just reported from here in the Middle East. You have Russia's invasion into Ukraine. You could also argue the China-US relationship. So all these things is a global backdrop. But fundamentally, people need critical infrastructure. You do need access to energy, electricity, reliable, affordable, and increasingly important green infrastructure. You need access to digital infrastructure, the whole AI digitalization. And I can say that there is also an opportunity coming up here, as you say, with the nearshoring in Mexico. So the whole change in the supply chain, you can look at that from Southeast Asia, Eastern Europe fitting into EU, or Mexico into the US. I mean, that creates real opportunities. And clearly, we have invested heavily behind that and doing, industrial parks in Vietnam or big solar projects, across these markets.
Torborn, before we let you go, I mean, you've touched on it, which is the power needed for AI, the data centers. It's one big theme. You see ADNOC doing a deal with Exxon. Are these the kind of deals that you're going to go after, which is infrastructure for carbon capture, infrastructure involving hydrogen, or how do we drill down in the rest of the world?
Yeah, I mean, I think that, there is an enormous need, in the first place for data centers in the parts of the world that we are focusing on. And I think teaming up here with General Atlantic, we will then be stronger, specifically in this space of digital. And we build infrastructure. They have a connection with many of the clients for that digital infrastructure. And there are many examples of that, how we can grow that together.
Okay, well, we wish you well with that. Indeed, as you say, everything, a lot of it beyond the shores of the United States of America. Come and sit down with Danny and I next time you're in New York. That is Torborn Caesar of Actis. Coming up on the show, we'll set you up for your trading day. We got a little bit more jobs data on deck. Context matters from New York every morning on Bloomberg Brief.
You're watching Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get more economic data. ADP numbers come out at 8:15 a.m. Eastern. Then Tesla auto sales will be released. That happens before the bell. We're also going to get some more Fed speak. We will hear from the Fed's Hammock, Musalem, Bowman, and Barkin on deck all throughout the day. Manus.
Yeah, Tesla. There you go. Let's see what they're delivering. A couple of stocks for you to watch. Nike, we talked about it a couple of times this morning. Down 5%. Post-earnings decline. They withdraw the full-year guidance. They want to give the new CEO the time to transition in. China just wasn't as bad as they thought, but Chevron down up 1.4%, gaining alongside the other European energy and defense stocks. This is on escalation risk. Oil is up 5% now, net over the past 2 days. What will Israel's next move be on Iran? RTX also a little bit better bid there, up 1.65% this morning. Danny.
Risk still a bit weaker this morning overall, Manus. Oil is still higher, as you're noting. But talking to Anna Rosenberg of Amundi this hour, she's basically saying, look, the market is treating this as if it's not going to be an all-out war, and that's the right posture to take.
Yeah, her language was tit for tat. It's not all-out war. And it's very interesting because she draws the analysis. She doesn't think that Israel will go after the oil infrastructure. But again, we need to debate then if they did go after the nuclear infrastructure, is that escalation or opportunity for Israel?
Yeah, look, it's certainly going to be on the mind of all investors today. That's it for us. Surveillance will take you through the next few hours.